Hello, my name is Troy Epperson, and this is my website, oneononetrading.com. I've been doing trading and educating for many, many years, and if you're that guy that are almost break even, you're break even, you can't quite get over the line into profitability, maybe you could use a couple of hours of coaching that will really help maybe focus you and get you on your path to success. If so, please check out my website, oneononetrading.com, and I hope you enjoy the morning brief. Good morning and welcome to the morning brief. Today is Thursday, March 2nd. As you can see, we've had the 8:30 numbers have already come out. The unemployment claims were 190K. Expected was 196, so the unemployment or employment story continues to be super, super strong. This is a very low number. Also, revised non-farm productivity month over quarter was up 1.7%. Not as much as expected, but still positive. When productivity rises, it means you're getting more work done in the same amount of time you used to get it done. You're getting more work done in the same amount of time. So more productivity means better efficiency, etc. Revised unit labor costs were greater than expected. This is also saying that inflation's still here. Inflation is still here. What do we have later in the day? We have natural gas storage, and we have after 4 o'clock, we have Federal Reserve FOMC member Waller speaking, and later in the evening, also Kashkari is speaking as well. So really relatively light news day. So let's take a look at some charts. We've broken out of this sort of consolidation band, and we have some support right down here from January 19th. That's kind of the projection, 3901 or 3900 if you want to round it. 3900 is the downside. If we really get excited, maybe we can get down to that low volume node right there at 3886. That's certainly possible. Top side, lots and lots and lots of resistance, overhead resistance, big volume there. A high volume node at 3988. We've got a low volume node at 4,850. Those would be my this is where it could go based on size of the ranges over the last few days, etc. Let's go to the next chart. So let's minimize that and get it out of here. Looking at inventory, so yesterday we had a big divergence. So inventory increased dramatically, 22,000, almost 23,000. And you can see here is the close, the previous close to right there. So we were down. So we have a major divergence here. I'm going to draw some lines. So we have this going on versus this going on. So that's big divergence. Anytime there's divergence, something is brewing. Okay, so if the market's going down, but look how many people were buying. Net buying was well above 23,000. 23,000 extra contracts were created yesterday during this sell-off. As you can, this is the bottom. This is bottom fishing. This is trying to buy the dip, whatever you want to call it. And anytime we have a divergence like that, we have to sit up and say, okay, what's going on here? So somebody's buying. Who that is? Is it the retail crowd doing buy the dip? Is it the smart money? Don't know. We just know that there is something amiss, something that doesn't smell right. So be careful. Be very, very careful. This usually leads to some sort of trend change or some sort of major news item that's coming today or tomorrow that they're anticipating and they're getting ready for. They're either, in this case, they're adding positions. So maybe they think there's a good number coming on Friday. I don't know. I just tell you that whenever we have divergence like this, you have to pay attention. Let's go ahead and go down to the daily chart. This is the 7-minute chart. Looking for areas of confluence. You can see that how they did not like. I don't think they liked the prices that were up higher, because everything else was good. That's the 8:30 numbers coming down here. We've got confluence on the top side. By confluence, I mean like a cluster of levels that have been important in the past. So there's a big old cluster right in here, 39.61. And I would jump up into this area, 39.75. So there's not a lot of resistance on the top side. On the bottom side, we've got some support, 39.25 and 39.12. And then we have to go down a little bit further to 38.93.50. Those would be the three levels on the bottom side. Stock Traders Almanac is bearish, 33.3%. So that's pretty bearish to be 33.3. That means that there's a 67% chance that the market will go down today. Okay, so that's a very negative historical bias. Always keep these historical biases in mind. They don't work all the time, but at least you have a bias to start your day out based on historical data from the Stock Traders Almanac. Hope you guys have a great day, and I'll see you tomorrow.